Yeah, welcome back to Face, Mark. Happy New Year to you, buddy.
Happy New Year to everybody. Hopefully, this is a year that everybody gets what they want, even if it's not quite what we deserve.
All
Happy New
right,
Year, Marc. I'm going to turn you over to Dale.
I'll toast to that, Mark. So, what's top of mind and your narrative for, say, the first few months, first quarter of this year? What are you thinking?
Well, I was listening to the show and I heard Gregor go over the charts, and I sort of find myself in agreement with him that the dollar had a big sell-off in November and December, and I think it's been a bit exaggerated. I think that the idea that I think that we live in a probabilistic world. And so it's really a question of not if the Fed cuts, but when, how much, what's the probability? And the market seems too confident to me that the Fed's going to cut 5 times, and the market's pricing in 5.5 cuts
Yeah.
this year. And I think the market's gotten ahead of itself. And we've seen a small pushback by some Fed officials. I don't see anything the Fed has said that they're going to cut rates in March, for example. And the market's got that largely priced in, call it 70% chance or so. So bottom line here, I'm looking for the market to correct a little bit like it has last year several times, and the market deviates from the Federal Reserve and then ultimately converges back with the Federal Reserve. And that I think as it converges back to the Fed, I think the dollar gets a little bit of a pop here. But over the for the course of the whole year, kind of interesting. One of the things you guys didn't mention or didn't hear it in the show was this is the beginning of the presidential election year, and
Okay.
there's big cycles that get involved, of course, and typically the stock market does not sell off. I think we've had in the last 17 election cycles 15 rallies. That is the fourth year
Okay.
of the presidential term. The stock market rallies 15 out of the last 17 cycles. Of those, two that missed, the two exceptions were, I believe, the financial crisis and 2000. But in any event, the odds favor rallying in the stock market. And I looked at how the dollar index does, and typically the dollar index also rallies historically in the fourth year of a presidential term. However, in the last couple of years, it's been much more, in the last couple of cycles, I should say, it's been more mixed. And so I think the dollar is going to fall this year. But it still has to be proven, of course. And at least in the first part of the year, to your point, Dale, I look for the dollar to trade a little bit better.
All right. So, personally, Mark, I think I'm going to have a chance to buy euro around the 107 handle. That we're going to take out this recent low and even retest the lows that we had in late December before, we had this nice rally in euro. Am
I
I
think, I
being
think that
too
that's possible.
ambitious?
I think that's reasonable. But for me, though, I mean, and I think that behind that kind of a more bearish view of the euro is that we still aren't getting really good news from Europe. Just today, the Germans reported 7/10 decline in industrial production.
Wow.
I don't think that the German economy, the industrial output, has risen since end of 2022. And so I hear you. I mean, and this is really I think the dilemma that many people have. We are not getting good news from Europe or Japan or China for that matter. But what is happening, I think, is that the divergence we saw where the U.S. economy outperformed so well, say in the middle quarters of last year, I think that outperformance narrows new convergence at lower absolute levels. And this is just to say the U.S. economy slows down before Europe picks up.
Okay. I noticed on this recent sell-off in the dollar before we turned at par 60 that the commodity currencies were outperforming. And, I really like the Aussie if I have a chance to buy it down here at 65 and a half. Do you have any commentary or fundamentals that could back up my technical view of why commodity currencies may outperform, say, the European currencies, the euro, cable, etc.?
Maybe it's the fundamentalist in me, but I have a problem thinking about the Aussie or Canada as really commodity currencies. And this is what I
Okay.
really love about the foreign exchange market. The average daily turnover, according to the Bank for International Settlements, and you can find this on the internet, they do a survey every 3 years, it's over $7.5 trillion a day. Global trade in a year is say, I mean, there's different ways to calculate, but call it world trade in a year, 35, $40 trillion. We see that in a week in the foreign exchange market. So to me, when I try to analyze the foreign exchange market, especially for the major currencies, I typically focus on those forces that drive capital. I'm not so interested in goods trade, partly because it's so small compared to the capital markets. So when I think about the Australian dollar, for example, here's why I expect it to also outperform. But it has nothing to do with what happens to commodity prices. Here's what's happened. Australia was slow to cut interest rates. Excuse me, they were slow to raise interest rates post-COVID. And so their overnight interest rate target is about 4.35%, well below most other major countries, leaving aside Japan, of course. And so because they were slow to raise interest rates, they're going to be slow to cut interest rates. And partly we'll see this tomorrow, I think, when they come out with the inflation report, the monthly CPI. So while we're talking about 5 cuts or more from the Federal Reserve, same thing for the Bank of England, more or less, same thing for the ECB, we're talking about 2 rate cuts for the RBA. And so the resilience, so that the interest rate differentials then narrow, favoring Australia as the central bank perhaps a laggard among the majors to cut interest rates this year. Of course, this leaves aside what the Japanese will have to do, but so I'm more favorable to the Aussie, not because of commodity prices, though they might be able to make a case for that, but I'm really more bullish to the Aussie because on the relative monetary policy and the fact that they're likely to cut rates much less than the U.S., the Eurozone, the UK.
Okay, that's a fundamental to me. Does China come into the equation when you're thinking about Aussie?
I think for a lot of people, sentiment is so important, because my crypto friends are right. There's nothing behind these fiat currencies besides the central banks and the confidence in it. So it's a bit of a confidence game, I think. But so when I think a lot of people think about Australia as sort of the G10 way to express views about China. I don't think it works so well. I remember being on that Floyd Chicago Mercantile Exchange around the same time you were, Dale, and I learned that from traders that you have a view, trade the view. I remember sometimes suggesting early in my career buying sterling and selling yen as a bullish way to express oil. Why not just trade oil if that's your view? And so similarly, in the currency market, I think if you have a view on China, trade China. Trade as close as you can to what you have your view on. Now, there's too many other sort of moving parts when it comes to the Aussie or the other major currencies as a proxy for China.
Okay. Well, any view on China? I mean, their markets have been under pressure while the rest of the world has been really performing. Well, here you go. Here's FXI making new lows for the year here.
Yeah, I have a small investment in this ETF. I had thought that other countries tightening policy, China obviously wasn't. I thought the Chinese stock market would do better. I'll tell you what really concerns me about China. It's not so much of it from an investment point of view. I mean, I would say that this idea that is floating around, and partly from U.S. officials, that China is uninvestable, seems to me that they're not talking to the right people. Talk to McDonald's, talk to Starbucks, talk to Kentucky Fried Chicken, talk to Popeyes, and so I think that there are some sectors that are doing well in China and expanding. I mean, very rapidly, faster expansion in China than many other countries. But I think what scares me the most about China, though, is not just that it's an aggressive in the South China Sea, that it's harassing Taiwan ahead of this weekend's elections. Not so surprising. To me, the most surprising thing is their willingness to challenge the Philippines, who the U.S. has a mutual defense agreement with, unlike in Taiwan. So it does disturb me, but I think that behind the scenes, there seems to be this camp. I call it a war camp, though they don't like that term. But these people who are constantly, mostly Americans, some Europeans, no matter what China does, they're critical of China. And that gets our focus away from what's really disrupting about China, and especially its provocative military actions. And it's not just, like I say, it's the Philippines and Taiwan, but they are moving across the border into Bhutan, that small some buffer states like Nepal between India and China. And China is just moving into those territories, villages at a time. And so it does disturb me, but I think that for me, the problem is that if we talk about China, how it manages its currency, of course they manage the currency, but I find a strong correlation between the Chinese currency and the general direction of the yen.
Yes,
And
I've
China,
seen that. Yeah.
and I think that China, in some ways, that CNH, that offshore RMB, is really a good funding currency. Low volatility, low interest rates, generally softer. And so rather than using the yen where the Japanese could raise interest rates, I think someone said in March, I sort of think it'll happen in April after the fiscal year ends, after some of the subsidies for energy come off, which boosts inflation, after the wage round. So I'm looking for April timeframe, but why use the Japanese yen, which has become a more volatile currency, as a short leg of carry trades or funding plays? Shorting the CNH and buying a higher yielding or a more volatile asset seems better than using the yen or even the Taiwanese dollar.
Okay. Really a lot of great points made on that. I don't know if it has anything to do with it, but all of a sudden at our border, Mark, or where it's mainly been Central Americans, there've been something like 30,000 immigrants from China seeking asylum, which is like 10 times the normal amount this year. And they're saying they're fleeing because of a lack of economic opportunities since COVID. Anything that you see in that? I know it made you chuckle a little bit.
Yeah, no,
Why are they running away?
yeah, it's one of those stories, right? I mean, it's sort of like we did the same thing with the Soviet Union. How many people left the Soviet Union to live in Western Europe or the US compared to the other way around? So
Yeah,
I think that's a very powerful voting with our feet. But at the
yeah,
same time, I think that to me the immigration story is a very important story. I think that it's going to be one of the key issues in the U.S. Elections. But we're already seeing it in Europe as well. A real pushback against immigration. This is shifting the
everywhere.
political spectrum to the right, and
Yeah,
I think it is kind of ironic, right, in a way that many countries have shrinking populations. We have slow population growth in those countries that do have growth whatsoever. And we've got tight labor market. And to me, the two surprising things over the holidays really came from Japan. One is they are selling or going to trade Pershing missiles back to the U.S. so we can give our missiles to the Ukraine, and so we can replenish our stocks. Japan, who is obviously worried about what China is going to do with Taiwan and in the area, they're going to be giving up some of its missiles to the U.S. But separate from that, back to the immigration story, while the rest of the world, Europe, the U.S., are sort of clamping
shrinking
down harder on
demographically. Yeah,
immigration,
yeah,
Japan is boosting immigration. And this is the really a remarkable thing because, for most of our careers, Japan was kind of insular. It was hard for foreign language speaking people to operate in Japan. And that's changing as necessity is driving this. Japan has a shrinking population. They're encouraging foreign workers for the first time that I can remember.
Wow. Okay, that's pretty interesting. Anything else that you really want to cover that's top of mind? I mean, maybe we should talk about this election. Are you looking for, without being political, one of the most chaotic elections? The credibility of the election and people believing in the process with a rerun of what we had 4 years ago. I mean, do you have any feeling of what's really going to go down at this stage? I mean, we're only, 10 months away. That flies. So do you think there's going to be uh, any type of real chaotic type of stuff going on that may make it difficult to have a legitimate election?
I don't know if I question the legitimacy of U.S. elections, but I would note that, the U.S. election late this year, we've got something almost half the world's population is going to vote this year. So this is really a year of democracy, even if it's a formal democracy. I sort of tease about Japan. Japan's Liberal Democratic Party has dominated Japanese politics for almost as long as the Communist parties ruled China, which is almost as long as the Democratic Party has ruled my home county, Cook County, and Chicago. We're talking about going back to the mid-50s. Democratic parties run Cook County and Chicago. It's the Liberal Democratic Party has run Japan. And of course, we got the Communist Party in China. So, but for the U.S. election, I don't know what to make of it. I mean, I think that generally my sense is that most people feel that neither party, and we do have this two-party system. It's really a duopoly. It's not the multi-party system we've seen in other countries like Europe. But I think most people are dissatisfied with the candidates that are most likely to get both parties' nominations. I don't think that helps the general cause of maintaining the legitimacy of U.S. elections, but I don't think that there's really a doubt in most people's minds that the U.S. election is as fair as elections get. Yes, there's always irregularities, but are they material? And I think that, so for me, it's what I'm struck by is the continuity on many key issues, leaving aside domestic, tax, and social policy issues. But when it comes to foreign policy issues, when it comes to tariffs, I think that it's hard to tell the difference between from 2016 to 2020, and then from 2020 to 2024. We're seeing tariffs. We're seeing, I think that the American political elite are divided on social issues. We've still got the cultural wars. But when it comes to foreign policy, there's a general agreement. And I think that general agreement recognizes certain countries as enemies. And it's really a question of how we deal with that.
Yeah, bipartisan. It's the only thing that Congress is bipartisan on is having an adversarial relationship with China.
Not just China, but I'd say Iran as well. And I think that when it comes to Russia and Ukraine, I think that it's not just the Republicans that want to slow down the aid or stop the aid to Ukraine. I saw a poll, I think it was conducted by Dow Jones, suggesting that almost half of Americans think we've given too much money to Ukraine. And of course, the EU is blocking too. They have to make decisions unanimously. Hungary is blocking that. But even beyond that, I think that the war between Russia and Ukraine is reaching a point where people are tired, exhausted, including the Ukrainians, not able to have a general draft and get the soldiers that they need. So I think if there was
peace is coming, Mark, peace is coming, just out of necessity, just out of exhaustion.
I don't know about, for me, maybe a ceasefire of some kind. But I don't know about peace. I don't know if the borders, I think to me, this is really the big challenge in some ways, is this concept of deterrence has broken down. Russia was not deterred from going to Ukraine. And why should they? They took Crimea with very little repercussions. They invaded Georgia, little repercussions. The Hamas obviously has not respected the deterrence that Israel thought was in place. As I mentioned, China is not respecting the deterrence in East Asia, especially in regard to the Philippines. I think this is part of the crux of the matter is deterrence is broken down and it makes the world a more dangerous and volatile place. Okay,
so you brought it up, so I'm going to bring it up. You brought it up that your Bitcoin friends are right. I've never heard you talk about Bitcoin. So tell us what you're thinking after this tremendous run. A lot of people say they, down here they believed in the technology. So, and that it was going to be adopted. So we've had this major adoption. Is this $100,000 Bitcoin coming like a lot of people have been talking about for years? And
yeah, I don't know. I'm still skeptical that Bitcoin has a what's the purpose? What's the function? And I can see how you can make the argument that in some countries that don't have a banking system, people have confidence in, or hyperinflation. I can see all that, or money, a lot of capital regulations. I could see that as a use case. But in Europe, in the U.S., Europe, Japan, Australia, Canada. I'm not sure that there's really much of a use case for it, and I'm skeptical that it's really money in the way that economists define money. And remember, economists have three definitions of money. It's a means of exchange, and of course, people are not using Bitcoin to buy goods or services in the real economy. They could, it's possible, but it's not happening. And we're not just talking about a new product. We're talking about Bitcoin's been around for almost a decade. Secondly, it should be a store of value. And I'm not sure that it could be really a store of value, though it's rallied like gold has. Non-interest bearing security, non-interest bearing asset can rally when interest rates are falling, when risk appetites are strong. That's what's happening.
So
and
just another venue for speculation.
I think so. I think so.
Interesting.
And I think to me, that speaks to, we remember pet.com.
Yeah, I do.
I remember Pet Rocks. And so I think that to me, the fact that we had higher inflation and we spent a lot of money during COVID doesn't really undermine this case that I've tried writing about, that we live in a world of surplus capital. Our problems from capitalism don't come from the shortages but really from the surpluses. And I think that's really the challenge. We generate too much product, overcapacity in the industry. We need someplace to put our money, and we create these new asset classes, and it draws in. It's sort of, if that money wasn't going to crypto, where would it be going? Inflating stock prices even higher, inflating real estate prices.
Bonds?
Yeah, I mean, if we're still talking, the Japanese still have negative interest rates, and so. The only way I can conceive of how crypto has done so well when people aren't using it in the real economy is it's a safety valve. The surplus, they would have gone to other, perhaps less useful things,
like gold and
less
silver,
desirable.
like
gold, silver, other types of speculation. I mean, we've got governments promoting lotteries.
Yeah.
Pure speculation. And so I think the crypto is part of that to me. It's a fascinating experiment to watch, but I still don't see the real use case in the major industrialized economies.
Okay. Your comment on yields and the Fed, we could wrap it with that.
Sure. Yeah, I think it's one of these times the market's gotten a bit ahead of itself on how aggressive the Fed's going to be. I'm looking for the yields to back up a little bit more. I liked what you had said earlier in the show, Dale, about maybe it's 4.20, 4.25 or so on the 10-year yield. I don't think the U.S. economy is falling off a cliff. I think there's some problems with the survey, the jobs numbers, but we'll see this next week. We're going to get another rise in retail sales. We saw a big jump in consumer credit when it was reported yesterday. I think that yes, the U.S. economy is slowing down, but it's not very dramatic or abrupt. I think we're looking at something like 2% here in Q1. Q4 around 2%, maybe something like that in Q1.
There are some respected people that are saying that 5% wasn't it, and that perhaps later in the year we're above 5%. Can you think of could it just be supply that drives it up rather than it being growth? Could it just be supply overwhelming demand that could drive rates up, Mark?
I suppose it could be. I mean, I was thinking back in the big rally we had, say, in the fall, was driven by the new supply projections, and this is the amazing thing. We don't. People aren't talking about it so much, but the U.S. budget deficit last year was about 6.2% of GDP, and this is when the economy is growing above trend growth, full employment. These are just huge deficits relative to the underlying economy. This year's budget deficit looked around 6%. So a lot of supply, but I think that the demand is still there. I think that we see this in the auctions, even if some of the auctions are a bit spotty. Look at this chart you have up there. More than 100 basis point rally in the last, that is a decline, 100 basis point decline in the last 2 months of the year. And so I think that if there's really a crisis about supply, if there really was a worry about the deficit, which reminds me of what Ronald Reagan said, when they asked him, you're cutting taxes, you're increasing spending, what are you going to do about the deficit? Reagan said the deficit was big enough to take care of itself. And I sort of think that same thing true here, is that it's yes, it's a cause of concern, but it's not an urgent, immediate issue. And I don't think it's really the best explanation for the vagaries of the bond market. I think that we've had this the big drop, 100 basis points more. So I think we get a little bit of a bounce. Maybe it's halfway back. That would bring us maybe to 420, 425, something in that area. I am, for the first time in my life, and maybe it's also I'm getting a bit older, I sort of like these long-term interest rates, the rally in rates, and I'm trying to lock in, not just in the U.S., like a J.P. Morgan bond pays a premium over treasuries, but the U.S. is not the only one that issues dollar-denominated bonds. And so I'm looking at other countries, other companies who are issuing dollar-denominated bonds that are good credit risk and that are a premium to the U.S. Treasury.
Okay, and that might even have foreign currency aspect to it.
No, I think that when it comes to trading foreign exchange, I want to really for these kind of long-term investments, I want the dollar-denominated bonds. I don't want to take exchange rate risk. I want it to be a pure yield play, taking the credit risk of, say, a company like Pemex, where the government is giving the government is giving the Pemex dollars to service its debt this year, and so I'm looking for plays like that. Romania's got an interesting dollar bond as well. So you're taking credit risk, but not taking currency risk.
Okay, Mark, I want to thank you for, I don't know how many years you and I have been talking. I think it goes back to the FX Street days, and maybe we waved at each other or had an out trade on the floor. I don't know, but really want to thank you for the years of you contributing to the communities I've been part of, especially here the last 6-7 years, bringing your ideas to the table to edify face and our community. We appreciate you, Mark. So hope you have a great 2024, and we're all fans.
Well, thanks a lot, Dale. Yeah, no, thank you. I think perhaps it's, I think about my career, and I think it's not, I sort of can empathize more with what Thomas Edison said. He said he didn't fail. He found 10,000 ways it didn't work. And I think that experience and longevity is partly is the function, is it just we learn from experience, and hopefully we can manage that risk on the downside.
Marc Chandler, everybody. Follow Mark at Mark Making Sense. And your website again, Mark, so that people could keep in touch with you and contact you.
Sure. So I'm fortunate. My employers let me post my commentaries at a website, marktomarket.com, Mark with a C. And I appreciate Dale and FX Analytix for reposting the commentary. Of course, it's really trying to participate in the dialogue of the day. So whether it's my website, Mark to Market.
Well, Mark, I want to thank you again, buddy. Happy New Year, and I hope 2024 is your best year in all ways, not just the markets. I think Mark's gone, so I hope everyone enjoyed it, and you could join the team in 15 minutes for the morning edge, everyone. Don't just count your pips, count your blessings, and being able to talk to you guys every day is one. Even though there's some days when that alarm goes off at 4 o'clock, I say, oh man, I want to go back to sleep. Anyway, hope everyone enjoyed it. You're welcome, everyone, and see you tomorrow. Good luck on Turnaround Tuesday, and talk to everyone tomorrow. Don't just count your pips, count your blessings. You're welcome, Merle, Ishmael. See everyone tomorrow. Adios.
Hey traders, this is Blake Morrow with Forex Analytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.